trade where you got wicked out of the VWAP.
Yeah.
Just like I want to better understand where you had your stop and kind of like what happened there.
Yeah. So stop on a trade like this is always going to be through the low,
Yep.
right? And so as price, I mean, look at when we have a huge move in the market, like this wick looks like nothing, but this is a 30, almost 40 point move.
Yeah, it's huge.
Yeah.
Yeah.
And so that's a massive move. I start to see that and I'm dragging the trail higher, higher, higher. Right.
Oh,
And so
gotcha. Okay, so you got it. Okay, so you were just you were just trying to protect your downside in case it just snapped back.
exactly. So
Got
once,
it.
yeah.
Okay.
So
Got it.
the the final exit was still profitable, but
Sure.
it was not like I took a true stop on that trade. I just got wicked out of it. When I see an explosive move like that, I know that, there's a decent chance it's gonna be pulling back
Yep.
relatively rapidly. And so I don't want to give back too much of that almost instant profit that I had, right? And so sometimes that means I'm going to miss out on a move like this, but after enough times trading through FOMC, I'd rather just kind of see if I could secure a couple base hits rather than going for some huge home run, because when you try and do that, inevitably it ends up just a disaster, right? And
Yep.
so
Yep.
still
Yeah.
want to still want to be, trading smart, trading cautiously, protecting our downside, definitely moving that trail, because the market, it is respecting the technicals, but during all of this, PAL is ongoing, and so there is some kind of what I like to call headline risk in there, and it's not really worth it to me to be trading with really loose stops on a day like today.
Yep. Okay. Great. That's as you know, I've been setting my stops really tight, and I'm just trying to learn when people like leave them versus adjust them. So that was a great explanation.
Yeah, I mean, if you are in I think this is relevant to a lot of traders. Like if you find yourself getting trailed out of trades too soon, I don't think that is, obviously at some point you want to be improving, but I don't think that is like a major issue. It's not going to be a major hurdle
Yeah.
for most developing traders. Like it is a good thing to learn how to scalp
Mm-hmm. Mm-hmm.
before you're actually able to hold on to some of these larger moves. Because the thing to understand is that to hold on to some contracts for a larger, like let's just use this as an example. Well, we know price zigs and zags toward its target, and a scalp would just be like, catching this little piece, or
Right.
maybe without that wick, like catching this piece, and you can't hold for the pullback. Like it's just too mentally challenging to hold for that pullback. So if you can get in the habit of just nailing this initial zig and then start to, familiarize yourself with how these zags, right, zigzag, how
Mhm.
these start to develop, then you can really mentally understand, how price action builds out a structure, and you won't have that fear, because taking trades too early is just it's usually going to be a fear of giving back the gains, right? And
Yep.
so
Yep.
to me, a lot of that is rooted in not necessarily the dollar amount, but it's a lack of knowledge about how price actually develops that structure. And once you
Mhm.
really internalize that, well, a pullback is going to be pretty normal here, then you could scale out of partials and then start to hold the rest of it and let that structure develop. Once you have price actually building out that structure and then breaking the high of whatever that, we'll call this a microstructure, is, you
Right.
can then effectively raise the trail and then, kind of go with each step, because that's what price does.
Sure.
You'll get that directional move. It'll either consolidate or give you a little pullback. You get the next leg, and so when you get that next leg, you bring your trail up here. But you
Yep.
really need to watch how price unfolds, like so many different times before that really starts to stick.
Mm-hmm. Mm-hmm.
So I mean, that's pretty, getting trailed out too soon is pretty normal. What I could suggest is definitely trying to implement some sort of system. And so what you can do, and what I've seen that has been effective for a lot of traders, is just use, like, say, like a 1 minute trailing stop system. And basically what that means is, let's say you enter through here, right? Well, you do not move the trail until you have a 1 minute bar closed. And then once that 1 minute bar is closed, you move the trail below that prior 1 minute bar. So once this 1 minute bar closes where my cursor is, the trail goes up here. Once this next one closes, right, you move the trail up here. And yes, there are going to be scenarios where you still get taken out too soon, but this will build the habit and kind of get you more familiar with how to hold on to a trade.
Oh, that's great. Yeah. Okay.
Makes sense?
Great explanation. Thanks a lot for that.
Yeah, you bet. All of it can be, solved relatively easily with just an adherence to some sort of process, and then following it for at least a few weeks, and then just seeing where you're at. Like, okay, well, what, I would say, okay, I'm going to commit to this process for, the next 2 to 4 weeks. And then let's see how the results look. Am I still getting taken out of trades too early? Is it a net benefit from what I was doing previously? Of course, all of this is time consuming, and you have to look at the data and things like that, but it's how you get better at the craft.